Yeah, so we are continuing, and we had this, and here after creating the accrued water bill, then let me first remove this, and you see how it actually came, how I actually got that one. I don't want that. So now when you open accrued water bill account, then here the DAO entry will appear on the credit side of accrued water bill 6,000. So then after because I have debited water bill account with accrued water bill, then here I'm crediting accrued water bill with water bill here. So now here I have two accounts, water bill account, which is an expense, then accrued water bill, which is a liability, because accruals are liabilities. So thereafter, after creating another ledger, then I balance. So here, balancing ledgers, I think this is 31st December of the year. Then here I'll have my my balance carried forward. My balance carried forward, which is 6,000. So when I say 6,000, the total here is 6,000, and my account has done what? Has balanced. So we are now done with the item number one. Item number one is done. So let me actually look for another item. So now where are we? We are going to go for this item. Item number 2, replacement cost of office supplies are 1,050,000 according to the current market prices. So we have this item has a reference in the trial balance, whereby this is inventory of office supplies here. This item here. So now we have to open this account. We know inventory of office supplies. This one, being an inventory, is an asset, and all assets, we said, all assets have a debit side. Assets and expenses are debited. If we can come back here, this item of ours, all assets are debit all assets and expenses, credit all what? All incomes and liabilities. So now office supplies, inventory of office supplies being, because an inventory is a current asset, so we have to go and open our what? We have to open our account. We must open our what? Our account for inventory. So I'm taking this one, copy, such that I can easily get what I want. So this account will be what? Will be inventory of office supplies account. Inventory of office supplies account. So now, being an asset, it means we shall actually say 1st January 2019. 1st January. It will be 1st January. We shall say balance brought what? Because since it is in the trial balance, then this is balance brought what? Brought forward of how much? I think it was 1.2 million. 1,200,000. Okay, please, this is not there, because I'm getting a new account called inventory of office supplies. So you have to recognize a debit entry first, because it is an asset. Then after you have to actually ask yourself, if here. The office supplies inventory item, this was 1,200,000. Now the question is, why is it that in the additional information there was, because now you have an inventory worth that, and in case you want to go to the market and purchase it or buy the same stock, then you'll be spending 1,050,000. So now it means that the replacement, if the replacement cost, assuming that you have sold it all and you have got the same money, the same money, 1.2 million, and you go to the market to buy another inventory of the same quantity, then it means you'll find the value here. The value of the inventory supplies actually reduced. According to the current market prices, you get 1,050,000. The other one is what? Is 1,200,000. So here there is a decrease in value of the inventory. If you can have a look at this item, there is a decrease in value of what? Of inventory supplies. And when the value of the inventory decreases, who is losing? Then it means the organization is losing. So what we are going to now, this difference, the difference between 1 million and 1,050,000, the decrease, then we shall actually recognize that one as a loss. The loss in what? In the value of inventory. The inventory lost the value from 1,200,000 to 1,050,000. So what is the difference? The difference of, if you want to see the difference of this one, minus 1. So there is a difference of what? 150,000, which is a loss. So now, the balance carried forward here, we shall actually come here and say this is balance carried, that is 31st December. Then balance carried what? Carried forward would be 1,050,000. 1,050,000. So meaning that the difference of 150 here is a loss. That is a loss. A loss which must actually be taken to income and to be transferred to the income and expenditure. Income and expenditure. So this loss would actually be taken to the income and what? Would be taken to the income and expenditure. This loss in value of inventory will be actually be taken to the what? To the income and expenditure. This one, we have to recognize it, or we must actually know it. That one. So this is now the value of inventory fell down from 1.2 to 1,050,000. Realizing, there is a loss of 150,000. This one is a loss, and therefore it will amount to an expense. Then let us actually continue and see. Okay, we can have a short break and come back later.